Good evening, ladies and gentlemen. We are a couple years or a couple days out, a couple days out from the new year here. And I thought it would be fun to do a fun little live stream, talk about some stonks. But before we get into it, is this mic working? Every time I shift something over on this MacBook, something screws up, whether I lose the mic, lose the video. It looks like the mic's coming through. So we'll have a discussion here. All right. So first and foremost, guys, over the holidays, I'm sure many of you, talk about your family. You already talk with your family, maybe about stonks, a little bit of crypto discussions going on there. But I had the weirdest conversation, and I got to keep this relatively, I don't know, it's none of my business to really be talking about this, but I get fortunate sometimes to have these really weird and interesting conversations about investing. And I met this dude that wasn't as much into the stock market. He's kind of evolving there, but this dude be selling crazy sports cars because they're just worth too much money right now. And he's going to be flipping them into cigarettes and oil. I'm not going to explain too much into why, but my goodness, if you saw the vehicles he was selling and you saw how many cigarettes he would be buying, your mind would be blown as this guy explained to me why he would get a better return from those assets than he would the car sitting in the garage. Very odd conversation to be had, but hey, we all got our ways of investing. You know, we all have our knowledge base where we kind of pick and choose where to play. And my picking and choosings of where to play is in the stock market. And before we get into these stock picks, because I want to learn more about you guys as well and what kind of stocks you're looking at into 2022. I was watching this incredible video. I mean, it might be a little boring. I don't expect it to get a lot of views on here when I post it tomorrow morning. But I found this kind of retirement channel, and it was like the most mind-blowing stuff I've heard because these are like real people. These aren't people buying luxury homes or luxury cars. Like they were really kind of scaling back their lifestyle. And I just heard so many things I don't hear people talk about these days. Like usually it's about how you scale up to retirement. These people were more about how do we scale down to have the best, most relaxing retirement. And in this current environment, I want to ask Dave Ramsey. I really want to call up his shows. I hate when I hear people from Toronto calling up because I'm like, damn it, that could be me. But yeah, so anyways, what was going on here is that these people actually ended up selling their house and moving down into a rental apartment outside of the city where the price was $500 cheaper than they were going to anticipate, even though they owned their home. And it's just a fascinating discussion to me that, if you got $1 million in a property, right? Like, and I'm sure most people have the same experience in Toronto here, anywhere within an hour and a half of Toronto, your house is 800,000 to 1.2 million invested, even at a 5% dividend yield. I mean, you're cash flowing, $50,000. You're making 10% on that. You're talking about $100,000. And I really wanted to ask Dave Ramsey, just call him up and be like, yo, in the position, like it seems weird to own such an expensive house to live in, even into retirement, when that could offer so much freedom and so much cash flow. And you can't tell me that in rents are going to increase that rapidly, that 5%, that 50,000 a year, even if you were paying 2,500 a month in rental, right? A monthly rental. I mean, what is that, like close to 30,000 a year, whatever, 25, 30,000 a year. Even still, you have plenty of room, bleedway, for that cash to be spitting off that money that you have invested, right? But yeah, anyways, just some funny, interesting stuff. There's just always so much going on, and I just love hearing actual people doing real world things, not like the Grant Cardones and the flying the jets or the Ben Mallas of the world. Like, unfortunately, there's some real people out there living these experiences, and I feel it's more relatable, especially like people like Hidden Freedom is going to be fun to watch because he's transitioning into his retirement right now as well. But let's get into this, guys. Stocks 2022. Things are kind of wild. I opened my portfolio up on Monday, as I mentioned, to all-time high portfolio. Did not anticipate that because I really didn't look at the markets all day Monday until like the evening. Took a lot of time off. Seeing Tesla back over 1,100 pulling back. A lot of different positions kind of just jumped way higher than I was anticipating, which is kind of giving me a little bit more flexibility moving into 2022 because I may take some profits on Tesla, as I mentioned, to buy more Facebook. My bullishness on Facebook, man, it's just it's going to the moon. I don't know. I'm kind of scared about it because I obviously want to make the highest return possible. And I'm like, oh man, I'm so young, and everyone kind of picks and chooses where they want to play the most, and they unload like a huge percentage of their portfolio, like 50%, say into like crypto, like Andre Jake is doing, or you get other guys, and you kind of got to oh man, almost pull back the reins a little bit because I'm more of like a Kevin O'Leary when the risk tolerance comes around, where I'm like, if I were to lose like half of this, at least half of this, or put a stop loss or something, like how much am I willing to lose? But when I look at like the upside potential, man, I cannot find one stock out there that could compare to Facebook. I feel like it's the simplest lottery ticket I could buy for a quick 50%, 100% gain. I mean, maybe not in next year. Could happen, but I just, it's one of those companies where if it dropped even a half, I'd still be comfortable holding because my initial buy price is so damn low. I mean, I could easily double up the position, but I don't know if I want to scale that to like 40 or 50K. But damn, man, when I look at a company that could easily make me, 100,000 if I put 50K in it, oh God, I could easily see that doubling in the next 3 to 5, no problem. Concentration creates wealth. Concentration on what you know creates wealth. So I'm so bullish on Facebook. What do you guys got though? I mean, what are you guys most bullish on right now? I mean, there's so many stocks I could throw out, but when I run valuation metrics on them, it's hard to wrap your head around. Rocket Labs, yeah, that pulled back. Actually, they're doing a lot. What a great year, by the way, for space, the whole space industry. I mean, we saw the first flying, little helicopter on Mars for the first time ever. It's still flying around, by the way, taking aerial photos and building out maps, which is pretty wild. I mean, we saw the heavy, the whatever it's called there from SpaceX, that its first ever landing after blowing up like 10,000 times. So that was a pretty big accomplishment, considering that'll probably what takes us to Mars in the future. Rocket Labs came around. They actually built, I think, a landing rocket as well. I don't know if that's getting tested early next year, if it's already happened. So Rocket Labs is definitely interesting, and it's traded down a lot. I just have a fear with the small caps because I mean, I feel like they're going to keep downtrending. But yeah, maybe you picked up a good dip here, man. This could be a good time to start buying those small caps, but I'm still just waiting. Algonquin Power and Enbridge are what I am going to be buying more of. I like AQN, especially if you caught the falling knife. Unfortunately, I bought it about 10% higher than the bottoms. So I'm just about flat on most of those positions now. I got a good decent chunk of Algonquin. I think I got about 15 or 20 grand sitting in that one already, maybe about 15. I'm quite bullish on Nvidia. Luckily got, I'm curious. Nvidia is one of those companies where I look at it and I'm really seeing it being like a, not next year, but the following year, where it'll be real big for them, even though they're already big. I mean, their quarter over quarter growth is nuts. It's actually, Nvidia is the only S&P top 10 company, and I've said this a lot. If you go on their earnings, they are the only company that within their earnings will show you growth quarter over quarter. Like, they highlight it. I'm like, they're like, oh guys, who cares about quarter last year? I mean, we're just talking about 3 months ago. We're already growing 5, 10, 15% above that, which is absolutely hilarious to me. But honestly, Nvidia for me, I think would be probably more of a 2023 play, just because of the chip shortages. I mean, yeah, they're going to do great. They're going to continue to make great revenues. It's priced into a lot of it, but I'm really curious to when they can get past the chip shortages, and making chips is complicated. So when we can get past those shortages and reach like full max saturation of the market and actually fulfill what people want, that's when Nvidia is going to become very interesting to me. Same with Tesla. Same with a lot of those companies that have the logistics and shortage problems. I mean, they're already trading so well and they're doing so well in this environment. To actually have like full capacity would be fascinating. Who knows? Maybe that doubles their revenue, right? I'm quite booked because, again, think about it, guys. Like, do you know how many people I know like just want to get cards? I mean, that's the reason they're so expensive. It would just be nuts to see what happens if they could just dump as many as they could possibly on the market, right? You got it at the 190s, 230 range. What's Nvidia at right now? Actually, that's a good question. I know me, Kevin's big into it, but it's the same thing with Tesla for me. It's like one of those things that if you get into it at the right price, it's great. But like, man, buying it, so I guess it's back over 300. I'd still be looking for a pullback, man. I'd really hope to see it come back down to like that 250 range, because man, oh man, it's just so damn expensive. I love watching what's that channel called? Everything Money. Those guys are like hardcore value investors, and they ream like every company out, like literally every company. Like they're not bullish on Microsoft. They think Apple's too expensive. They think Nvidia is too expensive. And when you see what their price targets are, I feel like they underrate what those companies' true potential is, because sometimes you have to price in just the branding power. Because I keep seeing them talk about Tesla, and they always talk about it like it's a car company, and they're like, if they get to 30% total market share, then they would be fair value, but even still, blah 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 blah. And it's just like, yeah, but they're into crypto. We're gonna get into robotics. The AI stuff is gonna be astronomical. I mean, there's just a lot of avenues for them where it's just like, wake me up in 2030, because I'm not holding it for 10 years out if they get like 30% of the car, the 30% of total market share with vehicles, which would take a lot. I mean, they need a lot more factories. I mean, nothing saying they can't get there. In fact, the reason that I think they'll potentially be the largest company in the US is the same reason GM was, right? Like GM, when they owned 50% of the total auto market, with just selling cars. Mind you, Tesla will hopefully have self-driving and a few other, mechanisms to add cash flow. They right now make up 56% of the total EV sales in the US. So if they can just pull off what GM did and stick in that 50% range, which I think will be hard, I think it'll be more likely to be 30 or 40%. But if they stick in that 50% range just for the US, and you tap on all that other stuff, I think you'd start getting into fair value. But dumb money, Money. I haven't watched Dumb Money in a while. Those guys have kind of gone. I got to go back and check their channel out. It's been a while. But Everything Money is way too critical, in my opinion, because if you watch those guys, you'll never take any risk, especially if you're younger when it's more appropriate. Because if you're like 20 years old right now, like buy Nvidia, buy Microsoft, who cares? Come back to me when you're 30 at my age now. I mean, you'd probably be a lot happier. I'm also buying Cardano in the crypto space. Yeah, I'm still buying Bitcoin, baby. I thought I would stop, but I can't help myself. Any gold or precious metal mines that are worth looking into? Yeah, I would definitely be buying the mines over the precious metal itself. But that's a tricky business. I work with, we've got a lot of sponsors on this channel for gold mining. I'm trying to think of some off the top of my head because there's one that I just did. I just don't want to shout the name out in case it's wrong. I'd have to go back and look. Yeah, the precious metal stuff is interesting because you can run the math pretty seamline on it. And I know a lot of the big guys have pulled back, so the valuations make a lot more sense on them. A lot of people are against the precious metal miners, but because of that pullback, they're actually trading at really discounted territory, in my opinion. But I'm not as much of a commodity. Some people love the commodity stuff. Some people do really well with it. Commodities scare the hell out of me. You can look at crypto as almost a commodity, and I don't know why I'm a little less terrified of it, even though it's probably more risky. Roku's looking pretty good. Yeah, Roku's interesting. A lot of, man, the small cap stuff. How big is Roku, by the way? I noticed that somebody was throwing out a small cap ETF. What the hell was it? And I went through the holdings of it because somehow it was up 30% year to date. And I realized that it's not really that small cap. Like the top weightings are $50 billion companies. Because I was like, how is a small cap ETF up this year? They should have got wrecked. Should have got wrecked. Every small cap got wrecked. If you're under like a 20 bill market cap, you got wrecked. It's highly doubtful that you didn't. Roku's at 31 billion. Yeah, let's take a look. $23 a share, or $231 a share. I wish $23 a share. Yeah, it's pulled back a lot too, down 27% year to date from those all-time highs, down 40%, a little more than that, actually, about 50% maybe. Looking at the 5-year, it's up a lot, actually. PE is pretty high on it. Roku's good, though, man. It's kind of like Square and a few others. If you are bullish on Facebook, are you looking into any of the metaverse cryptos? No. I have a big problem with crypto because most of it's just a scam to me and will be non-existent in the next 10 years. I think people are way too bullish on way too many cryptos. I mean, I keep looking at Ethereum and I'm like, I'm going to buy another crypto. I mean, I see some of the smaller caps that people are getting into, like a lot of them. I mean, there's so many small caps, like Hexo, Cardano, Solana. I mean, the list goes on and on. A lot of them are intriguing, but I don't know code. And honestly, when I look at how like expert coders talk about the Ethereum network, and I kind of remind myself it's being run by a kid that's like 22, 23 years old. And just because you don't know code that you can't wrap your head around what he did, it's clunky. The Ethereum network is unfortunately clunky, which makes me not want to buy into it because you're basically buying into crypto projects as though you're buying into the developers. And I don't know if I'm going to trust a guy that's in his mid 30s that has 15 years of developing and code experience. Because a lot of people, you can copy and paste a crypto together. It's too sketchy. Whereas, Bitcoin's the only one with real validity, even though it's not perfect in and of itself. It can get hacked with extreme, takes extreme circumstances depending. I think if you can get into quantum computing, that's when you might see, a little bit more finickiness with crypto, but I think we're a long ways from that. But I trust Bitcoin. I have a hard time buying anything else for those reasons, man. Like you give me one bull thesis on why you're into some of these and tell me what the utility is, and I'll be down. But if it's just a project, which all of them are projects, none of them are like, baked into society in any facet that's relevant, in my opinion. Like even NFTs, for Christ's sakes, like NFTs are relatively worthless unless they have something backing them. Like, I mean, it's the whole thing with crypto punks, right? Or the Bored Apes, is that they're backed by people worth hundreds of millions of dollars and you get to join their chat group. I mean, and people are just buying NFTs because they're pretty pictures. Like, I mean, there's only two value statements to it. You're either a famous artist and you're trying to sell some art, or you're starting a group. And that group only gives you access through whatever. Maybe sports games gets there or something, but right now it's all scam, and it's overvalued. And I think it's in a bubble. I keep saying that. I'll say it again. Crypto is in a bubble. And if I'm gonna, and again, I want to preface this because I honestly think that there is no market in the world where you have the highest potential to actually turn your life around and probably become more wealthy than anybody you'll ever meet than in the crypto sector. It's just a matter of I'm more into the path of least resistance to wealth, and I really believe that is Bitcoin. Unfortunately, Ethereum, I mean, you look at how many, what is it? I have to look it up real quick, but the numbers on how much Ethereum exists is insane. Most of those other cryptos have they're not deflationary by value. They're more inflationary, Whereas at least I know Bitcoin has a limited supply. It works. I can transfer it to China, transfer it to yen. I can move it around to different exchanges. It's very liquid. It's just, I don't know. I don't need to go on about it because I know a lot of you guys aren't into crypto, but I'm more into the other side of the crypto where I can make money off promotions and things like that. I feel like there's so many ways to make free crypto right now, which I talked about in my video today. When it's that point, you could buy famous physical art. I think if you, but then again, is it in a bubble? I mean, I watched Beeple, the most expensive sold piece of art in the NFT world ever, 60 million or something like that, something absurd, right? And even he said, like, I don't know if it's in a bubble. He's like, I wouldn't be surprised if it was. I think what happened with NFTs was there's people that made far too much money in crypto. Like they were early days to it, those crypto millionaires, and they're just trying to move capital around and park it, hide it, do whatever they can with it. Because you can't pull out 100 million into cash from Bitcoin. It would be the stupidest thing you'd ever do. Stupidest thing. And I don't know what you do with it. That's the problem, right? Because you want to convert it to real estate or something, but like, there's no way, like, to pull 100 million out in crypto, man, the government would be on your ass. I don't care what you say. There's no avoiding taxes. You're just better off keeping it, right? But then you have to look at options, staking, art, something else that can raise the value of it, diversify your portfolio, other cryptos, just any way to move it where it's not going to get taxed or controlled. What else we got here, guys? We don't need to keep rambling on it too much about crypto, even though it's a fascinatingly fun conversation. I just looked at Meet Kevin's portfolio. I mean, that guy's got so many different cryptos going on. How much actually do I got? Maybe we'll take a quick peek here. I don't even know anymore. I've been trying to do the crypto like promotion scam where I get people to sign up. I give them $100 and I make $60. Usually throw them a 10 extra bucks for let me do. I got about 15.1% of a Bitcoin. That's it, folks. That's it for now. Moving on though. What else, guys? What else you got for stocks? I mean, a lot of people in the dividend community. I watch PPC Ian still living the dividend dream. Actually, I watched a fun video and I have this constant debate myself. This guy on TikTok that I watch, he's been in the market for like 25 years. And he was going off about the amount of S&P top 10 companies he's watched come and go. And I just thought it was really entertaining because even he said he only buys index funds because it takes the stress out of knowing when to buy and knowing when to sell is. And I mean, it's such a tough debate right now because even though, you could be bullish on any of these top 10 companies, but if they go under, like, everything money thinks they're overvalued. I mean, everything up there. I mean, they're all overvalued. Google, Microsoft, Amazon. I mean, in 3 to 5 years, they might be cheap, but for right now, they're overvalued, right? So if they come down, the whole market comes with them. They make up way too big of a percentage. So I feel like you're playing with a double-edged sword, right? Like the safest companies on the planet with the best balance sheets by far, you either buy them or you buy the index. But if you buy the index, you might have less downside, but you're still exposed to those same companies. If you hate Tesla, you think it's overvalued, you think Nvidia is overvalued, why would you buy the index? You're giving yourself like such mass exposure to that stuff that like you don't have much of a choice but to kind of pick and choose these individual companies, right? And I don't feel like I'm in the game unless I'm, deep into these companies. Like I just fall in love and I feel like, sometimes I fall out of love and I'll sell stocks. I've done well with it so far over the last 7 years. So we'll see what the next 7 might look like. What do you got there? Thoughts on Costco? Should I, I don't like Costco. It seems like it won't come down. Costco, man. I mean, Walmart, I hate them. They're such overvalued things. It's like, what does it trade at right now? I said this so many times, guys. Like, I don't know who the hell is buying Costco. I just don't. I mean, they trade at values higher than growth stocks, but their revenue grows like snails. I mean, Costco's at a 48 PE for Christ's sakes. And if I go into the growth, I mean, it's laughable for that kind of PE, like the valuation you're paying on this. Let's just take a look at free cash flow. Actually, I'm kind of curious because usually I just look at growth and revenue, but they're going to give me the free cash flow for 2021. Yeah, I mean, their cash flow went down. Their free cash flow for 2021 is expected to be 5.3 billion against 2020 at 6 billion. So their free cash flow is down. That's lame. So we're losing money on that end. I mean, let's just take a look at the operating cash flow. I mean, operating cash flow is stagnating from 8.6 billion to 8.9 billion. Like, just what is attractive about Costco? I don't get it. The revenues are going up. Yeah, that's great, but they're not going up at a rate that's like, oh my God, I need this at a 40 or 50 PE. Like, I don't get it. How do you double their business easily? I mean, Google's business, I could see them doubling that, no problem. I could see Facebook doubling their business in the next 5 to 10 years. How the hell does Costco double their business? It's all based on population. I feel like, I don't know. I could be wrong. It's hard to not want to continue buying these big tech stocks when they make the whole market move. Eventually, that will change. Promise you, everyone's just flooding money into them right now. That's what's causing them to be overvalued. That's why I'm buying Facebook, because I could see Facebook dropping to a PE maybe in the high teens at most, but there's no way it's coming back down to a 10 or 15 with that growth rate. It would be nuts. It's trading at what, like a 22 or 23 PE right now, something like that. Costco's a top player in the food space. People gonna need food. Yeah, they're gonna need food, but I can grow food in my backyard. You farm life, man. You don't. I get people need food. I get it's like Pepsi. I get it. It's gonna be around forever, but why would I want to pay so much for that when I can go buy Facebook, a company that's growing revenues at like 40 or 50%? That bottom line EPS in the last quarter was what, 40, 50%? You know how nuts that is? Costco's never going to do that. Costco will never do that. It's food. I get it. Pepsi, for Christ's sake. What's Pepsi trading at right now? Buy Pepsi, man. Pepsi's got good stability. It's owned by all the pension funds. It's not going anywhere. It's got a PE of 29. You know how insane that is? You know how crazy it is that these companies, even though they're food related, trade for a higher value than Facebook does? And the only reason I'm saying that is go compare the revenue growth side by side. Your jaw will hit the floor. You're like, why would I even waste my money on Costco when Facebook's trading where it's trading? I mean, and these companies, like I feel like the best thing about Apple and Microsoft and stuff is they're so hindered by the logistics problem right now that once they get to the other side of this, that they're going to add an extra 6 to 10 billion a quarter potentially to that bottom line. I mean, I just feel like it was so overlooked in that last Apple conference call when Tim Cook said that they lost $6.8 billion because of the logistics and chip problems. You know how insane that is? You know what they could have added that to their bottom line? I mean, it would have bumped their growth percentage up like an extra 5% or whatever. So I feel like there's more potential in those guys. Was Costco going to say that? I don't think so. I don't. I think the hype of Costco and food stores is as hype as people's fear, right? If things go crazy, people get scared. They're going to stock food, and that's what Costco has for growth. And then they got population growth. Maybe they got more stores going up. You know, continue feeding the world, but they're not going to be growing at a 50% clip, 20% clip, even. Are they growing at a 20% clip? I don't think so. No, their free cash flow went down, for Christ's sakes. Your free cash flow is going down this year. What the fuck? How much cash should I have available in my portfolio for potential market crash? I don't know. No more than 6 to 12 months of an emergency expense. I usually don't keep more than about 5 or 10,000 laying around for potential stock buys. I always keep an emergency fund just in case that happens. But to be honest, I'm more about debt when it comes to the crash, because I have a hard time holding myself. Because like I said, man, you hold cash and you look at it rotting away when you know like there's probably good potential in some of the companies if you have confidence in your investments. That if you have that much confidence, why would you hold cash? That's my biggest problem. It's like I'm like a crackhead when it comes to that. I'm like, I stacked so much cash last year. I think I ended up with like 30 or 40. I think I still have a ton of cash, but the government's going to want to take most of it. So I don't know exactly how much cash I have, but I look at it and I'm like, why didn't I park it in Facebook this entire year? Why didn't I put it in Microsoft? Like I could have pulled it out at any time. I mean, like I don't got kids. There's so many variables, right? Like I don't have kids. I don't have family to feed. I don't have issues. I don't have an expensive car. I don't got any expenses at all. Like, why not just dump it all in, right? So what I'm doing is getting margin. I'm building up debt. Not that I'm using it, but I'm just keeping it as a reserve because I used that in March of 2020. I did well with it on my REITs when I bought RioCan. God, that paid off well. I wish I did more. But yeah, I'm just preparing myself for if a crash comes, then I want liquidity. So I'm going to use it through probably margin, cheap debt, load up again. Why not? Thanks for your thoughts on Costco. I got nothing against Costco. It could be a great stock. It could keep going up. I just can't wrap my head around it. I just can't. I don't understand the value of it. Like you're overpaying like to the point where you're gonna have to wait 20 years to get like any fair value on it from buying it today, that kind of growth. What's your opinion on buying cyclical type companies like Nintendo pays a dividend? Nintendo's an interesting one. To be honest, I've been really looking at I haven't wrapped my head around them enough to be wanting to buy them, but I really like the pure metaverse plays, the companies that actually have a real foothold, like like, a lot of the gaming companies, Unreal Engine that just launched the Matrix demo on their, I think it was their fifth iteration of Unreal. And it's Unreal is owned by Unisoft, I think. Unisoft stock. I'm just looking at it. I wish I could screen share with this. Sorry, guys. Yeah, but Unisoft is trading at a PE of 63. It's actually trading down quite a bit this year. It's down 47%. I'd have to look into why. From its all-time highs, it's down almost 60%. It's just getting absolutely decimated. But when I look at the numbers, it's not like they're positive cash flow or anything. But when you're talking about metaverse plays, I mean, that is video games. Microsoft owns a huge percentage of the metaverse right now. Apple's got a huge percentage of it. It already exists. It's what you do on your phone. It's what you do with social media. It's just a matter of like who's going to have the biggest foothold. And I think it's an Nvidia. I think Facebook has a chance. I think any of the companies that own the development software, like any editing software, when it comes to like 3D elements. I don't know if you guys have ever used After Effects or Blender or some of these hardcore editing programs where you can edit in 3D space and design these kind of games. But those are the guys that have the real foothold, right? Like if you think the metaverse is big, it's not going to be the crypto, I don't think. It's going to be the companies that actually own the software that it is developed on. Because Unreal Engine, I think, is what even Facebook uses. I could be wrong, but I know Facebook uses third-party software for everything they're doing on their platform. What's your opinion? Yeah, so sorry, what did you say here? What's your opinion on buying cyclical type company? Yeah, so Nintendo, yeah, that's just it, right? Like, it's great they pay a dividend. I like Nintendo if you're into gaming. Let me just take a look real quick. Yeah, so I wasn't looking into Nintendo as much as I was looking into, some of the main developing stuff. But Nintendo's 3.7% dividend yield is nice. It's Chinese play, by the way, because it does trade on the Tokyo Exchange. It is trading down. It could be a good pickup. 14 PE. Yeah, Nintendo probably not the worst pick. It's good throw out there actually. It's trading down 14.8 PE. It's probably getting dragged through some of the Chinese stuff. So yeah, I mean, heck, I'd throw it on my watch list for sure. Nintendo's classic. A Ryokan still a hold in 2022 for me. It is. Got it in such a good price. The cash flow is incredible. I'm well over 5% even with the dividend cut. Do I expect it to skyrocket anyway? No, but it should. The only reason I think it should is because they own the most valuable real estate in Toronto. And if you look at Canadian real estate, it went up by like 60% this year. So how? Because Ryokan didn't go up an extra 60% this year. Even though the stock doesn't correlate to the underlying asset value, it does give them a lot of liquidity. That's what I love about that REIT. I love Ryokan just because I know no matter what at this point, they're not going to have cash flow issue. The value of those properties, even if the tenants don't come anymore, is insane. Insane. For a developer to come in and pick one of those malls up downtown and just use it for development property, condo properties, which they're probably doing already. I mean, they could just flip those properties, right, and have an insane amount of liquidity and cash flow and capital gains on the bottom line. So I think they're great. Yeah, Ryokan cut their dividend at the beginning of this year, man. I don't know if you missed that. They did cut the dividend. I do like the new management. I didn't like the decision to cut the dividend, but I get why they did it. They could still afford the dividend. They were getting close to the payout ratio, but they're back to 98% rents. They got tons of cash. The dividend cut, I think, is giving them something like an extra 40 million or 400. I don't. It's a lot. The dividend cut is putting a lot of cash flow into their pocket, which I think they're going to use to build shareholder value. They don't do what Stag does. I like the fact that Ryokan doesn't do share dilution. I think the new management is more growth focused, which I like. I think they're more pivoting into a position where they'll benefit more. But I like my Ryokan, and it's for me, man. I love my city. I love Toronto. I understand the area here real well. I love the real estate. I like what's going on here. And Ryokan is the purest of pure plays to the Toronto real estate market. Will it go up? I don't know. It hasn't gone up in 10 years. The stock has never reached an all-time high in forever, even though I think they deserve to. But we'll see what happens, right? I own it like I'd like to own a real estate property, right? I just want that cash flow. I don't care about capital growth for that company specifically. You should care about capital growth, but I just like reinvesting the dividends, having access to that liquidity. What do you think about Canada Goose? That was a big one once upon a time. The only Canadian stock I'm interested in outside of the Canadian banks. Canada Goose, that was a big one, man. Once upon a time, Canada Goose. Let me look that sucker up. It's been a while since I've heard that one. It kind of reminds me of like Lavland. Last time I heard someone talk about that, it blew my mind because after the scandal. Canada Goose. What was Canada Goose again? Was that 85 PE, still in the growth range? It's been kind of up 27%. It's been meeting market value for the last 5 years. Have not been good for this company. Down 46% from all-time highs. Because this was a brand company, wasn't it? Canada Goose Holdings. I don't know. I'll have to look more into it. Canada Goose, man. Yeah, I don't, to be honest, man, I don't like any companies right now that don't sit in the top 10 list. Same with Canada. I mean, I bought Algonquin, it's pretty large cap, but honestly, man, if you just stick to those top weighted ETFs, that is where all the money goes. Always look at the Canadian banks and ask yourself why they're up that much. How are the Canadian banks up so damn much? Because they're top weighted index stocks. I think five Canadian banks make up 10 of the top 10 S&P TSX companies. So it's like you get easy money that way because that's like any pension fund, anybody that's just throwing money into the market, having an advisor buy them ETFs, they're buying the basic broader index ETFs. Rio can protect against inflation? Probably not. They own the real estate. Like I said, the company itself is protected against inflation because they have liquidity and they own the assets that are going up in value. So properties went up 50% this year, let's say, they could sell those properties, pocket 50% cap gains. Doesn't mean the stock's going to go up 50%. Doesn't mean your stock holding is going to beat inflation because unfortunately, real estate investment trusts aren't connected to the physical property. So you do not get the same luxury you would as actually owning the property. But at the same time, at least you have the protection that that REIT isn't going to be going bankrupt. And RioCan is literally one of the strongest balance sheet REITs. I think it is the strongest balance sheet REIT in Canada. Maybe some small caps might come into play, but when we're talking about large caps, I think they're the best leveraged. Canadian apartment properties maybe comes close, but I think they're a little bit more indebted. I'd have to double check. Buying more TD, RBC, BNS next year. Great picks. I'm buying more TD for sure. I'm thinking about TD and Facebook are like my two main picks for right now. Hey, Kyle, have you been using the Shakepay card? I've been loving the 4% dividend bonus. Yeah, see, I got my buddy onto the Shakepay card and he's been using it a lot, but that's because he's the guy mining the crypto and he's constantly cash flowing it out. And now he's like, oh, well, if I'm going to sell my crypto, I might as well just use the Shakepay card and make 4%. For me, I'm only buying crypto and I don't leave money sitting in that account. And I love the way even on Shakepay, they're like, open a wallet, protect your money, send it to your wallet. Don't leave it on Shakepay. It's kind of funny that they tell you that too. I mean to say Bitcoin bonus. I'm tired or as fuck right now. Yeah, like I said, man, that's the thing that I keep saying. Like, I feel like people are ignorant because they either hate crypto or they love crypto, but what they're missing is these opportunities to make a lot of money, even if you don't want to be in crypto. My buddy's mining; he's making $100 a day. He could care less about cryptocurrency. He literally didn't even have anything to do with it 4 or 5 months ago, and now he's mining, making $100 a day, cash flowing, just trying to get money out of the business. And anybody can do it. It's not rocket science. It is not rocket science. And I'm taking advantage from the Shakepay stuff, man. Like I said, I made $1,400 this year in free Bitcoin. It came in cash, by the way. Those payouts were in cash. I just used it to buy crypto, but that's more than $100 a month. People are staking. People are doing all kinds of crap, and they're just cash flowing like nuts. And meanwhile, people are like, "It's a scam. It's a scam. It's a bubble. It is a bubble." I think it's a huge bubble. Doesn't mean don't take advantage of it. Just because you got to like Jesus, guys, big money. Google's the best stock. It is 3 years from now. It's not the best stock right now, in my opinion. I love Google. I love Microsoft. I love Apple. They're just too expensive. When you're buying those companies today, just remind yourself you're holding them for 3 to 5 years out. That's when you'll be at fair value. If you buy Google today, you won't be at fair value until you're 3 years out from now. And so that means the stock could do nothing or go down. If it keeps going up, it doesn't make sense because it's not going up against cash flow. It's just going up because people are buying it, which scares the shit out of me, which is what's happening right now, right? S&P's trading at what? Almost a 30, which is insane, actually, for historical averages. Rates are going to increase, which will lead prices to decrease. Yeah, the rate increase will be fun. That's what I'm looking forward to. Because the best thing that could possibly happen, hands down, is interest rates go up, which they're going to control the living crap out of it, and people stop buying. People stop buying homes. People start struggling to pay for their mortgages. Heaven forbid it sucks, but I feel like there's potential over leverage in the market. And if for some reason things go bad, which I just can't see that happening though. I have such a hard time imagining that the real estate market crashes to any significant degree. It's just too hard to gauge that out. I think the Canadian real estate market's in a bubble. It's been very manipulated. Uh, a lot of people calling the Canadian real estate market a bubble. Do you know when the first rate increases? Yeah, the first quarter of next year, the US rates go up and the Canadian rates will go up. They pulled it back. I think over 2022, we're only going to see like a 0.5% to 1% increase. They're not going to do a full basis point next year because they're going to test the market just to see how it sustains. And then into 2023, that's when we'll be getting maybe percentages of increases. I think that's when you'll probably see full percentages to maybe even 2 or 3% increase if it's deemed necessary, because this this is all, based off certain data and, hyperinflation, which I think they should just raise rates now. There's too much liquidity in the markets, way too much liquidity. They need to pull it back. And I think it's priced into the market, to be honest. You look at utilities. I mean, it could be one of the big reasons that some REITs are, they're not doing like as good as they could be doing. Then again, Stag's up 50% this year. So who knows? Do we know so that's, I guess you don't have to have it in their lease agreement. Yeah. So the fun thing about the REITs though, is I'm more scared of utilities. Utilities are usually like way more leveraged, like, way more debt on the balance sheet than almost any other company out there, right? And it's hard to gauge out because they don't really publicize those lease agreements, or not the lease agreement, lease agreements, but the loan agreements. And typically those interest rates hopefully are locked into like 5-10 year agreements. Excuse me, guys. But when it comes to REITs, right? My biggest thing with the REITs is you can gauge out how safe they are, because I mean, you look at something like a medical properties trust, you look at like even a Stag Industrial, for example, some of those leases go out for 10 years. 10 years, guys. Interest could come back down in 5 years for all as we know. I mean, having a locked in lease agreement like that is amazing. Amazing for predictability and just understanding like the risk of, what's going on in the market. And the best thing about a medical property trust is they have it baked into their lease agreements that they have inflation baked in at 2%. It should be like 5 or 6%, or being realistic, probably like 16% or something like that. But in the best world, I mean, it doesn't get better than that. Could you imagine getting a tenant in a piece of real estate and saying, hey, I'm going to increase your rent every year and it's going to go up based on the inflation rate? So it's like, okay, that sounds good to me. I mean, guarantee some cash flow from some stable tenants, right? Retail space REITs should be avoided. Yes and no. Hard to debate, right? If you looked at like Toronto and the malls for Boxing Day, packed. Downtown malls packed for Boxing Day, even with all this, virus stuff going on, packed. Just depends on what one. And actually, you want to talk about office space too. I mean, go look at something like TNT.UN, True North something, True North Properties Trust or something like that. True North is one that I won't buy because it's a small cap. One of my buddies owns it. And I was blown away that through the pandemic, being a pure office REIT kept 98% of their tenants paying. Mind blown. Suncor, big dividend increase. Do not like oil. Oil's for the Matty money. There's a lot of oil people out there. Not for me. I like some of the nat gas places and the utilities like Algonquin give you kind of exposure to some of that. But to be honest, I can't stand oil. I mean, it's too unpredictable. I say that a lot. I'm not a fan of commodities. Never have been. Probably never will be, because I can't predict pricing. If you own it, like the guy that I was talking about earlier in the stream, if you own a place to sell oil, like through a gas station or something, I get it. But to the physical like stocks, I mean, what has Suncor done for you? If you're buying it for cash flow, I get it for sure. They're great cash flowers, they're great values. But let's just take a look here, because Suncor was one I used to own. I sold Suncor because they bought Canadian oil sands. I don't know how many of you have been in the market that long, because that's like 5-6 years ago. When Sun, let's see what it's at. It's up. Well, it's doing good. If you bought at the beginning of the year, you're up 47%. So good for you. But I mean, on a 5-year basis, you're down 30%. And from its all-time highs, I mean, Suncor is still down, what, 50% from its all-time high, like more 15 years ago. Like, I don't like those charts. If you want to buy it for cash flow, great. If you want to day trade them or swing trade them, that's been a big debate for me too. Swing trading gold stocks. I love gold companies because they're so volatile. Same with oil companies. They seem maybe unpredictable, but they just do big swings. They don't really go up or down. Last year, there's been a lot of volatility, but let's just look at Suncor real quick again, just to take a look to see if it, yeah, I mean, just look at the last month. It does 5% mood swings on the monthly. Like, you could easily buy this when it drops below a certain point and then sell it when it pops up. In the last 6 months, I mean, it's been all over the place. Great swing trade companies. You could probably get 2 or 3 good swings out of them a year. Canadian Tire stock. Oh, Canadian Tire. That's a fun one. Fun one indeed. Man, you guys are all about the Canadian stocks today. I love it. I love it. Canadian Tire is a really interesting one to me. I've looked at it many of times in the past, but I've never been down to buy it because it's trading down like a whopping 15% from its all-time high year. This is how great, it's volatile, but it's kind of great because it's trading up about 9% on the year, but it's down 15% from its all-time highs. But it's such a stable company, man. Canadian Tire, PE of 10, $11 billion market cap. What's the growth rate on this second? Let me pull it up real quick. Let's see what the revenues look like. Have they been growing decently with the revs? They must be. They must be. So this year they're expected to do 16 billion against last year's 14 billion, and the year before that was 14.5. 14. Yeah, they're growing. They're growing. They're doing okay. Great stabilizer. R123. You think you're asking somebody about Enbridge as a long-term sustainable? Yeah, Enbridge is long-term sustainable. I think it's one of the S&P top 10 companies in Canada. Canadian Tire has a REIT, CT Real Estate Investment Trust. Oh, really? They have a. What do you mean they have a REIT? What are they? They like a spun off real estate part of their company or what? CT REIT? Is that what it's called? Let's take a look. I don't know if I want to REIT that's concentrated in one business, but or you mean CRT, CT Real Estate Investment Trust, ticker symbol CRT.UN. It's up 11%, 5% yield, pretty high. It doesn't look too bad. Looks like a good little cash flower. Yeah, it's interesting. I have to take a look at it. I'll leave it open and I'll come back to that one in a little bit. Toronto funded 2013 subsidiary, limited partner. Why not own midstreams like Enbridge? I like Enbridge. I think it's a good own for cash flow. I just don't like companies that aren't hitting all-time highs, guys. That's the problem with oil. That's the problem with commodities. That's the problem with like so much, so many companies. Like when was the last time Enbridge hit an all-time high? When was the last time Suncor hit an all-time high? Call me picky, but like, guys, Facebook's up like 20% this year, and I still think it has like 50, so much growth ahead of it. I mean, when was the last time Enbridge did anything like that? Like what, back in 2014 was when it was at its all-time high? Like that's ridiculous. If you want a 7% yield and that's all you care about, then by all means. But and again, we own stocks like that. I own, like I said, real Kansas stock I only own for cash flow. But I can understand it. I have a hard time understanding oil because I don't get how people wrap their head around it, honestly. Like you ask people why they're so bullish on oil, and they're like, "Oh, barrel's worth this much, margins are great." Okay, then Saudi comes in and does this, that, or the other, and oil goes negative for the first time ever. Could you have predicted that? No. Could I have predicted that Microsoft was still gonna, sell their video games and that they were gonna raise prices and dump an extra like 400 million onto their bottom line last year, and just continue to grow at absurd rates? Yeah, totally predictable. Totally predictable. Like there's a 90% degree of certainty. I bet that Microsoft will do better next year than they did this year. Same with so many companies. But can you say that about oil? Could you give me a 90% certainty that oil isn't going to go back negative or the government's going to manipulate it to try and fight inflation? No, it's so unpredictable. Terrifying. Terrifying to me. Brookfield Infrastructure, BIP. That's one that I look at a lot. The Brookfield, they manage so much, man. Brookfield, there's Brookfield Real Estate Investment Trust, there's Brookfield Renewable Partners, there's Brookfield Infrastructure. They're all over the place. Man, that company, who owns that company? They must be loaded. They own like so many different subsidiaries. I mean, this company's doing great. It's up 21% year to date. It's a Canadian company. It's 5 years. It's up 400%. It's outperforming Cathie Wood, for Christ's sake. So the 3.4% dividend yield, what the hell is going on here, Brookfield? A PE of 23. Ooh, man, I already like this company. I mean, this is what I want to see, baby. That's what I want to see in a chart. That's what I want to see in a dividend yield. That's what I usually see for a growth company. That's a reasonable PE for this kind of growth. So what kind of numbers are we pulling? I haven't looked in this company forever. Total revenue. Oh my God, look at this. In 2019, they did 6.5 billion. This year, they're expected to do 10.8 billion. Boom. See how easy that was? I already like this company. I don't need to look at those shitty charts with Suncor and Algonquin. This is the chart you want to find. I mean, guys, it's not rocket science. You just got to checklist a few things. Is the stock going up? Is the dividend increasing? Is the cash flow going up? In 5 seconds of me looking at this company, boom, it's making my watch list. I'm going to dig into this one because let's just take a look at free cash flow first, though. There's got to be, yeah. So they're hitting almost $1 billion on the bottom line. Actually, the cash flow this year is expected to go down, so I might be a little curious by that. But again, from 2018, 523 million in free cash flow to today, where they're expected to do just under $1 billion. Last year, they did 1.05 billion. God damn. What is this company doing, man? Infrastructure Partners. I want to be an infrastructure. I want to make these kind of returns. This is nuts. I mean, that's it, guys. There's a good company to add to your watch list. Like people make investing hard because they get greedy with dividends. I would rather get that 20% return and lock in that 3% yield than have a flat stock and make a 7% yield off MO or off Enbridge, right? Don't get blinded by yield, folks. Nothing wrong with yield. It's good to have that money to invest. Like I said, there's nothing wrong with it. You always want a percentage of yield. Just try and find yield that'll attain you some growth as well, right? Yes, Enbridge has a huge infrastructure in the U.S. upon their purchase of. Yeah, no, I agree. I think Enbridge has a safe 7% yield for sure. Actually, are they growing their yield? Does Enbridge grow their yields? That's another good question too. I haven't looked in it in a while. Enbridge dividend history. There really isn't that much you guys have to look into. I mean, when I go through a checklist, like this is literally all it takes. It doesn't take a genius to check a list a few things off and then just actually make sure the company is running a foundational, stable, diversified business. That's why I like Stag. I think Stag Industrial is like the pivoting of like education behind like how to invest. Not now, I think it's expensive, but like when we were buying it at the $30 range when it was expensive, even back then. But just going through that, like you just look at it, the company's diversified, it's real estate, it's paying a monthly dividend. That dividend has been increasing year over year. The stock price has been increasing year over year. It's just like you don't have to look at a lot of factors to just realize what a good company is based off just a few metrics. It's just a matter of actually listening to the conference calls and just double checking that the people running the company actually feel like they're competent, like you feel like there's a future to that company and they're going to keep sustaining whatever they're doing into the future. Because again, the past performance doesn't equal future return. And eventually all businesses stagnate, all of them. So you kind of got to just make sure that there's enough runway that, you know, when things start to stagnate, you'll still have time to get out. That's my fear with like, not all oil companies. A lot of them are transitioning right now, but I mean, yeah. So yeah, Enbridge has gone from 2017, let's go back to 2016, 53 cents, 86 cents. Yeah. So the dividend yields is great. I mean, Enbridge is a dividend company. Let's be real. You're buying it for long-term dividend growth. You are not buying it for capital growth, but I think you can get the best of both worlds. And if you can find those rarities, they are great. They are great. CP Rail buying KCS means they're only. Does Warren Buffett still own the rails? Good question. Buffett's getting old. John Deere has infrastructure segment and agricultural segment. John Deere has like aerospace segment for Christ's sakes. Yeah, drones and autonomous vehicles. I mean, they've been in autonomous vehicles before people even knew what the hell autonomous vehicles were. John Deere's a classic, man. Classic, classic, classic. I don't own it, but it's like the most diversified farming company you can own. I mean, most people aren't even aware combines have GPSs in them and they drive around the field like a lawnmower, your house cleaner, like the little Roombas or whatever. You just pop it in the field, hit go, and you know the GPS just takes the tractor around the field and just does it automatically. I think people have to sit in it like a Tesla just to monitor it, but it's wild, man. John Deere's been on the forefront of technology for a while. Really interesting stuff. It's getting pretty late here, guys. I'm gonna go play some more games soon here. That's my whole last. You know, I got crazy anxiety when I'm not doing work. That's why I'm pumping out videos this week. I'll be pumping out a lot. Yeah, John Deere's a tech company. If you're not okay, so like this is what Kathy Wood keeps saying, right? And I don't think Kathy Wood pertainably might have the best stocks because you know, I was looking at some growth rates she's anticipating, and 40% year over year seems kind of absurd. I mean, I I like the way she invests, but man, oh man, like even from those stocks trading down as far as they're trading down, I look at the growth that she's anticipating, and when you run the math on it, I think like everything money did a little bit of that. I think they said that like the entire market cap of their top 10 companies would be like 7 trillion combined, which the total market cap of like I don't know, it's hard to imagine realistically. There's only a few companies that I could see getting to like insane growth, and unfortunately, it's the same stocks that I'll be beating my head on the wall for the next probably 3 to 6 months, which will be Facebook, Nvidia, Tesla. I wouldn't buy Tesla right now. I'd avoid Tesla. Just buy Facebook. Yeah, man, I've been playing the metaverse stuff so hard. If you guys, all of my friends got one now. We all got the Oculus. I've been playing. What's it called? If you guys get it, man, add me up to Facebook. I'll play with you. We've been having a great time with Population One. A lot of the first-person shooters. Awesome stuff, man. Awesome stuff. Baba, yeah, actually, I mentioned that in my video. So the two best stocks, honestly, guys, if I was going to take on a lot of risk and I wanted to like play hardcore risk, it would be Baba and Facebook until I die. If I could just buy two stocks right now and load the boat, I'd be careful with Baba. It looks like it's bottoming, but I would wait just to see and confirm the turnaround. You might lose out on 20 to 50% of an upside, but just wait. Just take a deep breath and wait, man. If Baba starts turning around, I would I'd load the boat. If we can get past the political rhetoric, which is always going to be a problem, and even if the stock turns around, something could come up that could wipe that gain out. But Facebook and Baba, man, I feel like if you just loaded up on those, came back in like 3 to 5 years, or heck, even maybe at the end of next year, you're going to be like, hey, that wasn't a bad idea. They are just, the numbers make sense. Facebook only has to grow at a 15% rate for the numbers to make sense at the current price. And they're growing at a 20 to 30% rate. So like lots of bleed room. Why Baba? Doesn't the Chinese government hate tech? I don't think they hate tech. I think they're just trying to do certain things, make society a little better. A lot of the Chinese rules make sense, man. The Western media puts a sinister undertone to it. Some of it doesn't make any sense to me. Actually, I was just talking with my boss today, and we were having this discussion about like, what makes the US so powerful for tech. And unfortunately, I think one of those things, not unfortunately, but fortunately, capitalism and allowing people to become billionaires. Because there's a lot of debate about how much is too much. But unfortunately, if you don't give people to make $1 billion, to become someone like Elon Musk, like you have to do something so profound for society. Like you have to give something back to society that's so insane. And to be able to do that, isn't there some kind of deserving of that power? I mean, I don't want the government to have my money. I mean, I think I said it in my, like, I mean, think of it this way. This comes back to the NASA discussion. The government doesn't need more money. They need less money, less politics, less people. Their primary job has been stretching too far into like personal bounds, especially in Canada, especially during this pandemic. But look at NASA, for example. NASA in the last 10 years, I think, spent like $200 billion. And how far did that get them? Seriously, how far did that get them? It didn't get them really back to the moon. Didn't really, I mean, where's it getting them? Think about it. Go look up at how much Elon and SpaceX have spent. 17 billion. How has SpaceX gotten as far as they've gotten with 17 billion, whereas NASA had to spend like 20, 30 times that to get not even to a point where they canceled the primary space programs. Like, it's like, what the fuck? So I think that's the problem with China. I think China doesn't give their people that kind of respect or power. And I think that's one of the biggest downfalls, because most of the major CEOs have stepped down, but that doesn't negate the fact that those companies are powerhouses. I mean, look at Steve Jobs. I mean, he stepped down from Apple. Apple's still an incredible company, and it's managed very well. I think the people managing Alibaba, I went through the last earnings report. I think they're very intelligent people. A lot of them OGs to the board, have been around for a very long time, and I think they're going to continue to do well. I just feel like that's what holds China back. I feel like you have to almost let people become billionaires. They're not all going to be great people. Some of them are going to be assholes, for sure. But some of them are going to be like Elon Musk, man, and just inspire the world and change things, right? And those are the people you want to invest with. I mean, that's the thing, right? Like when you're buying a Tesla stock, I think you're buying it beyond its value just for that reason. Eventually, the valuation will matter, eventually. But for now, it's like buying an Elon Musk token. It's like, hey, it's like buying a sports card. It doesn't really matter about the value right now. Need to load up on LMT. That's cheap. LMT is cheap. 0.72's holdings are more appealing than, yeah, I might agree with you there. Are you in ATD? Oh, is that a Canadian Timber? Oh, maybe I'm wrong. I don't want to start spouting out ATD. I think I know that stock, ATD. That's a really good stock, man. I've been looking at that one for years. I think it's the same one I'm thinking of. Nope, never mind. Oh, Couche-Tard. I think PPC Ian owns that one, or maybe he doesn't. I know we talked about it once. Couche-Tard's a great growth stock. I'm not in it though, because they're too gas station exposed, and they're trying to pivot gas stations into MJ stores. So I don't want to be exposed to gas stations. I just don't see the future they have. I just don't. I don't know how. When I look at what they have to deal with, like even if you put in charging stations, why? Like why? Here's my thing to charging stations. Tesla wins. Why do we need anybody else? If you can just make a charging station at home, why can't I just open an app, you leave it outside, and I pay you to use your hydro? Why can't I do that? I honestly don't understand the point of building out a whole charging infrastructure when all you have to do is log into an app, see who has a charging station on the side of their house, and get permission to plug into it. I have no idea why we're even like building charging stations out when most people are going to be building them into their office buildings. They're going to be building them into their factory buildings, wherever they're going to work. There's going to be a natural inclination to put in a charging station. So boom, like why do we need a gas station? I mean, yeah, they're basically convenience stores. Most of their value comes from the convenient aspect of it, but like So when I look at Couche-Tard, which is largely exposed to gas stations that are trying to pivot those businesses into dispensaries for MJ products and other stuff, I mean, that's it. They might as well become alcohol in drugstores. Because, like, what else could a gas station be in the future other than give it? I'm not talking about tomorrow. I mean, the company's going to be fine. They'll probably pivot, but give it 10, 20, 30 years. And I don't think gas stations are relevant. I just don't see them being relevant. Um, Stella Jones might be a good buy. The supply, a lot of pressure, treated lumber, Home Depot. Yeah, there's a lot good there. I heard Tesla is trying to get their engineers to charge their cars wirelessly. That's a tricky business. The wireless charging, I could see it happening. I mean, there's a lot of patents based on mat charging, similar to like the iPhone charger, which I actually have right here. Can't pull it around. I have wireless charging for my phone. Blows my mind at how fast it charges. Charges faster than it's got quick charge wirelessly, which is nuts. But for a car, oof, I don't know if that's going to be easy to accomplish. Right now, the biggest thing in battery tech is if you can get solid state batteries. And if you don't know what solid state batteries are, it is literally the holy grail of the entire battery sector. It's dangerous as hell. It's been damn near impossible to pull off, and anybody that's made anything close to a solid state battery isn't stable. It usually runs extremely hot. It's not safe to put it into a bus or a vehicle. And basically, if you guys know anything about transistors, that's all a solid state battery is. It gives you the capability to onload and offload an extreme amount of electricity very quickly. Because obviously, like, everyone wants to charge quicker, everyone wants more power, but it's extremely hard because that's what a transistor is, right? A transistor loads up a lot of power, like in the old flash camera batteries, because the flash was so bright, it'd have to charge up the transistor and load it up some, positive electrons, and then shoot all those electrons off at once. So the solid state idea is brilliant. It's like capturing lightning in a bottle. You could literally put it at the top of a tower and collect lightning bolts. It's kind of staggering when you think about the concept. But unfortunately, it doesn't work that way, and I don't think it will. I know Toyota is making one of their largest investments in solid state batteries, but it's like one of those things, guys, where Toyota, these legacy car companies, if they can't get a foothold and they're just investing into stuff that doesn't have relevancy today, they're going to lose a lot of market share. Batteries will eventually be replaced with graphene car. Yeah, no, graphene's huge. I work with a graphene company, Salon Graphite. Actually, you guys can look it up. Actually, that's a great company. Oh my God, I should get them on as a sponsor. I work so directly with them. I work with this guy, love him to death. With my other business that I'm employed by, Salon Graphite trades for 20 damn cents a share. Actually, I should maybe buy some of it as a joke. Just pick some of it up. The company's done nothing, but they're working on graphite anode batteries. Like, they're trying to do the full circle, and I think they're based out of Sri Lanka. And I know a lot about the mining and stuff there because they're not allowed to do explosive mining. They actually have to go into the ground and pull it out like manually, but labor's cheap at least. And like, they have like some of the highest grade of graphite and graphene concentrates, and they're literally shipping it to Europe, I think, where they're building out some batteries that'll be like some of the highest grade that they plan on offloading to like Tesla and any other car company that may need it. And every time I talk to this guy, we kind of joke about the stock because it's like, you look at all these battery companies that are trading to the moon, and yet this kind of micro capped graphene company is trading for 20 cents. It's got a $26 million market cap. Let's just take a look at their assets real quick. This is a good reminder. I'm not telling anyone to buy this. Obviously, these things are risky. I've made some recommendations for small caps that didn't work out so well that I didn't even buy. But this is one that interests me. I mean, a lot, because it's just some of these underrated battery plays that nobody even talks about, or people don't even know they exist. Have you looked into buying ETH yet? Foresee any crypto crash soon? Yeah, crypto is going to crash miserably. Don't know when, but it's going to come. Promise you that. Just ask yourself this: Did the dog? It's so weird to me how people can't see a market that's overvalued. I keep saying crypto's a bubble, man. I talked about this early in the stream. Crypto's a bubble. It's a huge bubble. NFTs, bubble. Most cryptos, 98% of them gone in 10 years. They will not exist. How do I know this? Go back to the day of the internet. You only know the companies that survived the dot-com bubble. They're worth thousands. Thousands. I can't even iterate that enough, that do not exist today. Crypto is going to be exactly the same. It's literally the internet back in the 90s. It's had 10 years to develop. It's gotten very incrementally far. It's very hardly infrastructurally used. And it's just, guys, come on. It's a bubble. It's a bubble. It's going to be the MySpace. It's going to be MySpace. Most of those things are going to be gone. It's going to be MSN. You remember MSN? How many of you were old enough to remember using MSN chat? How many are you old enough to remember when you were downloading adult graphic content that it used to load on a screen like this? And anytime somebody picked up the phone, the internet would cut off because they would cut the phone line would cut it off. I mean, AOL, for Christ's sakes. I could name so many things from when I was a kid that just do not exist anymore. Luckily, RuneScape made it, though. I mean, RuneScape, that was an OG game right there. I used to play, and it's still around today. So there's one thing that's still around. I professed my love to the first crush on MSN. MSN was OG. It just sucked because your parents would get pissed. It's kind of crazy to me, guys. I was joking about this with somebody that now VR, from when I was a kid, VR has made, the adult filming industry, like, make it look like that they're actually in front of you. Like, the VR adult industry is there. It exists. I didn't think it was, but it's there. My buddy had no problem finding it. He thought it was funny as hell, but you can watch that stuff in virtual reality, like they're there with you. Whereas before it was like a 2D screen with loading bars just to get one image to come up that would take like 5 minutes. We've come a long way in the last 10 or 15 years. Oh, longer than that, 15 years. I'm 30 years old. Damn it. Holy shit. I'm getting old. Oh God, guys, that's the scary thing about investing. You want to be rich. It takes time, but the problem is you don't want to give up all that time. You want to enjoy it too, right? Because don't want to trade too much time for too much money and give up on, life experiences. Thoughts on Apple releasing VR AR headsets this year? They won't. They won't. They're not. They're not. Come on, guys. It's like the Apple car. By the time they release the Apple car, it's going to be so irrelevant. It's going to be irrelevant. Yeah, Apple is like Batman. They have a bat cave. They don't talk about shit. They give us anecdotes and little tidbitted tweets. They literally said they're working on a car. It's going to have no steering wheel and no gas pedals. That's it. That's all we've heard for like the last 2 years. Meanwhile, Tesla's like, hey, look at our crazy ass computers. Hey, look at this. This is how we're doing that. This is how we're doing this. And they're so transparent. Apple's like annoying. I don't like Apple for that reason. I love Apple, but I don't like that they hide everything. They don't build hype very well. And is it going to matter in 5 years if they release a car? I mean, we're already going to have BMWs coming out next year. We're going to have, so many different electric vehicles to choose from, and self-driving is going to become more prevalent, and Apple's going to be noise in the back. Noise in the back. They'll be non-existent. Not non-existent, but noise, unfortunately. First mover advantage. First mover advantage. Tesla's captured the audience of nations. Apple's like, hey guys, we're going to be releasing a car in 5 years, 3 years, 2025 or some shit. Do we even have manufacturing? Does Apple even have a factory, for Christ's sakes? Geez, you are being, I'm not bearish on Apple. I'm bullish as hell on Apple. Apple, for the first time in 5 years, 10 years, proved their value with these M1 chips. Apple has made a laptop that is comparable to like a $7,000 or $8,000 gaming computer that you can't even buy because you can't even, think of it this way. A 3090, an RTX 3090, one graphics card, not including the processor, the power supply, a terabyte of storage, any of that shit, a computer case is going to cost you like $3,500, $4,000. I can buy a MacBook Pro for $4,000 that has the power of an $8,000 gaming PC, for Christ's sakes. Why does that not say enough? Apple's turning it around, baby. Their M1 chip, the best chip, the M1 Max Pro, has what, 57 billion transistors. Intel's next best marketable chip has like 5.8 billion, 5 billion. Think about that. They're Apple's best chip right now. You can buy and hold in your hand, has 10 times the transistors, which doesn't always equate to like more processing power, but that's where it mostly comes from. Compared to the next, and everyone's like, oh yeah, but Intel's got crazy chips. They're gonna have like terabyte or that trillion friggin' transistors, and they don't exist yet. They they don't exist in your hand. You can't buy them. They don't exist. So Apple right now leads the way on chips. They lead the way on just I'm using it to film this. Incredible. I love Apple, man. I got nothing against Apple. I think they're revolutionizing health. I think the iWatch, I want to buy one. Actually, I got a bonus from my work. I might buy one. I love them. That's why I own them. I've owned them forever. My average buy on Apple is $17 a share. It'd make you puke. I'm up almost 1,000%. I'm like 20 or 30% away from being up 1,000% on my Apple shares. How long have you been in Apple for? Yeah. I'm not that OG, but damn it, I've been in it for a while. What is the next Apple? Tesla. Tesla's the next Apple. I will make a bet that the competing largest cap companies in the world will be between Tesla. I'd like to say Nvidia, but I don't know. Nvidia, I got to wrap my head around chips a little more because there's a lot of manufacturing and things that go into that. But I would say Tesla, Facebook, Google. I'd like to say Amazon, but their margins are not that great. Amazon, if they had better margins, maybe because Amazon could make more money than any of those companies, but their margins won't be high enough. That's why I think Facebook and Google might have higher potential for the largest company in the world. Microsoft kind of plays in the same realm as Apple, so I still think Google, Facebook, Tesla might have the best position to get to a large scale market cap because they have great margins and the mark. See, the thing is when you're looking at the scope of those companies, you have to ask yourself how big are those market share, the market share of those industries, and what kind of value adds do they have. So when you look at Tesla, right? If they cap 30 to 50% of even the US market and you tap on self-driving and then you tap on, all that other stuff, it kind of becomes insurmountable. Like they'll be making more revenue than Amazon does in 10 years, no problem. Why isn't Tesla in a bubble, but crypto is? I think EVs are in a bubble. I think Tesla could potentially be a part of an EV bubble. Absolutely. I think Tesla will always trade an absurd value. Um, the EV market is the biggest bubble next to crypto, in my opinion. And yeah, it's hard to wrap your head around because Tesla, it's priced in 10 years. You really have to buy it for the long term, which means in between is going to be a lot of volatility. But the problem is things like Tesla are like Nike. Crypto doesn't have cash flow or utility. It may in the future, but it doesn't have any real world outside of Bitcoin and outside of maybe some projects and buying NFTs with Ethereum and these metaverse things and your Solanas and your Cardanos. They're projects. Tesla's not a project anymore. I mean, Tesla's a business that has real scaled potential, right? So tap that on with the fanboy mentality and the fact that the branding power is next to the likes of Nike and Apple. I mean, that's a formulation for a perfect storm for overvalued tech. So I think it could crash. I could see Tesla come down 50%, but the question is just who's going to give up those shares? It's like Bitcoin. Like I'm not going to give up my Bitcoin any more than I'm going to sell my Tesla shares to zero. I mean, it just wouldn't make sense. Doesn't mean that, it can't drop. That's why, like I said, guys, I like the nuances of tech. I'm young enough to take advantage of it. I could hold on to Tesla until I'm in my 40s. However, when I'm buying into these markets, you have to recognize where you're really speculating and where you're taking the path of least resistance to wealth. And the path of least resistance to wealth in these new occurring markets are typically within the largest cap, highest branded companies, Bitcoin, Tesla. Tesla's the leading EV company. Why do I need Rivian? Why do I need Neo? Yeah, they're cool, but they're shit in comparison. Let's be real. Tesla's a lot less to prove, and I'd rather overpay for that if I'm buying into those industries, which right now I'm not. I would not be buying Tesla stock here, just my opinion. But again, I was buying Tesla in 2019. People said the same shit. Same shit. Tesla's expensive. It's overvalued. Why are you buying it? Tesla dropped 50% from when I bought it. That hurt. Didn't care. Just kept buying more. Bought some more when it came back. Bought some more when it went higher. Made a fortune because it's a leading tech. I'm looking at Intact. I don't want to get into the Tesla rants. Tesla's a very controversial statement. But they're bubbles, man. They're bubbles. All bubbles. All bubbles. That's why I do not want to be too crazy exposed. AMC and then some AMC. Yeah, let's just load 2022 up on some GameStop, AMC. Let's just go all into the crypto markets. Let's just buy the most speculative shit and see who apes themselves to a million first. Who's going to ape themselves to a million first? Tesla triggered law. Yeah, you can trigger me with Tesla. You can trigger me with Facebook too, actually. I get really triggered over those companies because like I've done so much research into them that I realize most people don't. And that's why people lost out on those huge gains because they don't look past the face value of the company. And it pisses me off. It honestly does. Like Facebook over the weekend, people are like, oh, it amplifies the political rhetoric. Oh, it's amplifying the Me Too movement and these minority groups that somehow, their voices get so loud that they shroud common fucking sense that it doesn't make any sense. Literally. Facebook, man, it's just like they became the parent of society. The only way that shit affects your life is if you engage with it. When I go on my Facebook account, all I see is postings from my family. That's it. and some ads. I see a lot of Oculus ads, which is brilliant because it's free marketing. But it's not Facebook's job to parent your stupidity and your racist and your stupid like Me Too shit. And again, I get it. There's validity to it, but the only way that happens is if you engage it. Name one person on Facebook that feels body shamed unless you're engaging with that content. Who are you following? Kim Kardashian? Is that why you feel body shamed? Why is that a me problem? How about you just unfollow the bitch and move on with your life and stop worrying about it and focus on yourself, work out, feel better, do what makes you feel good. Don't fucking follow fake people and wonder why you feel like shit when their lives look way better than they are. That's not a Mark Zuckerberg problem. That's a you problem. So that's why I like buying Facebook. I get triggered. People bring it up to me all the fucking time. Why are you buying Tesla? It's a car company. It's overvalued. It's like, well, did you look at their AI tech? It's a sentient fucking robot. It's actually learning real world shit and actually translating it into, a mechanism. I mean, there's no company out there with that tech right now except friggin' Tesla. They're attracting the best engineers in the world. Like, I mean, come on. How are you missing that? Like, that's what I'm buying into, is the value of that is going to be insurmountable. How it becomes valuable, I don't know, but I'm willing to overpay for it today, knowing that in 10 years, if these guys are leading that industry, that it's eventually something will come around the corner. Like when I started my YouTube channel, sometimes when you start businesses, guys, if you can get a good underlying something, like, you have to know where the future's going and then you have to work your way there. It's kind of like Richard Branson. Richard Branson didn't invent the internet. Okay. When he started Virgin, he didn't invent the internet. But you know what he said? He said, this is going to be big. I don't know how big it's going to be. It's going to be big. I want to be a part of that. How do I be a part of that? Damn it. I'm going to build some internet structure. I'm not going to make a lot of money here in the beginning. I don't know how this is going to become cash flow positive, but I think there's going to be value to it. Elon said the same thing with electric cars. He's like, this is going to be big. 10 years ago, no one believes him. It's going to be big. I know it's going to be big. So I'm going to keep investing the money. Who cares about positive cash flow? Let me reinvest the money. Boom. What happens? Same thing with like YouTube and stuff, right? Like, I started this YouTube channel, didn't make money for a year, but I'm like, hey, YouTube's big. The finance space is one of the most profitable spaces in the YouTube industry. You know what happened this year? I made 6 figures. I made 6 fucking figures off YouTube stuff, social media stuff. 2 years ago, 3 years ago, when I started this channel, I made nothing. You know how many people came and went? I said one thing: I don't have to be the best. I don't got to be the best. I just know I have to outlast everybody, and I just got to make reasonable content. I got to talk about what I think is interesting here and keep up on it. Boom. Work hard. Pays off, guys. You got to just be diligent and realize that you're not going to know what the future holds. But if you just have a little bit of an edge and just play it out and just see where it goes, eventually it'll go somewhere good. Shoot for what did Elon say? Take your 10-year plan and shrink it into 6 months, because even you're not going to make your 10-year plan in 6 months, but you'll probably end up a lot farther than the guy that thinks it's going to take him 10 years. So just find some places where you can get ahead, guys, and start leading there. I was reading a book, actually. This guy was recommending a book that was supposed to help people that are in careers that are going to be dead in 10 years. It's so funny how many people are in careers that are dead. If you are flipping burgers at McDonald's, sorry, your career's dead in 10 years. If you are somebody that's answering at a McDonald's, like if you're the one doing the talking on the booth, your job's gone in 10 years. I'm sorry. If you're part of a factory machine working thing like Amazon, sorry, you're going to be replaced by a robot. I mean, you have to realize that that's what's coming. And if you are not willing to accept it today and start pivoting for your future, you're screwed. You are screwed. This isn't even a matter of predicting the future and making a lot of money. It's just a matter of making sure you're positioned correctly to survive the future. Um, it's a game. It's a fucking game. That's all it is, guys. Unfortunately, that's how the world evolves, right? I mean, me and my dad joke about this because my dad's like, "Oh, well, what are you going to do when there's no jobs?" It's like, there'll always be jobs, but go back 20 years ago, what jobs existed? You had people that would fill your gas tank for you. Where'd they go? There used to be people that would check your oil and fill your gas and your tires at the gas station. What happened to them? Gone. What happened to the typewriters? Remember when they used to make newspapers? What happened to those jobs? Gone. What replaced them? Oh yeah, engineers, software engineers, Facebook, Instagram, Snapchat, Bloomberg, Google. I mean, you got to realize what's coming and pivot yourself. You don't want to be the guy sitting at the newspaper station right now, making 5% of what you were 10 years ago and wondering what the hell happened to your life. This is a good conversation because I was thinking about this too. And I'm going to finish up on this note. Evergreen content. Can you name right now something that you think is evergreen? What evergreen is, just the idea that, it'll be around forever. There's nothing that can disrupt it. And when I think about it, when it comes to businesses, guys, I don't think Facebook can be around forever. And like, I think they can evolve and be a part of this future, but are they the stabilized part of the next 200, 500 years? Do you know what companies I think will last that long? Johnson and Johnson. Johnson and Johnson will be around for the next 500 years. Pepsi, for as long as humanity stays going, Pepsi's going to be around for 500 years. Real estate, REITs are going to be around. I don't know about REITs, but if REITs can come in and go, but real estate will be around for 500 years. There's just very few industries that are evergreen. So I mean, like, it's kind of a challenging. Yeah, McDonald's will be around, but it will change. It will change a lot. Actually, I think it's better for McDonald's because if you own the stock, the amount of money they're going to save. Because here's the big thing, right? Oh, employees, we got to pay employees more. They don't want to work for less. Hyperinflation. How do we pay? That's the big dilemma. Is at McDonald's, if we raise the salary of everybody, then we have to raise the prices of the food. But hey, if we replace their job with a robot that flips the burger there, and they don't need the person to flip the burger, boom, we're going to save that salary. We can keep prices the same at McDonald's and we can make just as much or if more money because now we're not paying out 40 or 50,000 a year in a salary. Boom. Good for McDonald's. Boom. Good for shareholders. McDonald's is always going to be around, but how it's around will be interesting. Banks can be evergreen. I think crypto is going to disrupt them to some degree. How that evolves, I have no idea, but I'll buy banks. I think they'll be around for a long time. They have to evolve though. The banking infrastructure is too old. It's too old. Anyways, folks, I've been rambling. I feel like I'm getting way too rambly. I haven't even finished my drink. It's a pretty good drink. It's pretty good. MJ will be around, but it's too competitive, my man. Grandma can grow MJ in her backyard. So you want to be careful with them MJ products. Apple was 30 cents in 2000. It's 180. Yeah, bro, go back 5 years ago when I was buying Apple at like that. In the teens, for Christ's sakes. Apple's a long way from those teens. They might have a burger making machine like a toaster. But that's just it. Like, okay, come on, man. You can't tell me that one of those tech robots that work at any kind of those car factories that like can't flip a fucking burger. They're welding car parts together right now. Why can't you just put one of those? It might cost you 100,000 per robot or maybe 400,000. But okay, you just do the math, right? If this bot's going to cost you, say, 200,000 for one of them to flip a burger, I mean, that's only 5 years of a salaried worker. 5 years, you get your money back, and then it starts cash flowing positively. It's not rocket science. Should be pretty straightforward eventually. And that tech's getting cheaper and cheaper, baby, every day. Apple was much higher before that, before it crashed in the 90s, 90%. Yeah, that is true. Sleepy baby. Oh, Maddie Money's on. Oh, I'm gonna get out of here, folks. I'm gonna go play more games. If you get the Oculus, download it, add me up. We can rip some fun games. It could be a fun way to interact with some of you guys. We could do like virtual meetups, which would be super cool. And you leverage real estate 5-1 when you do 20% down payment. I wouldn't do that. I talked to a guy. I'll bring it back around because the guy that I talked to, which I think Matt would be really interested in too, because he's a big oil guy. He literally looked at me, and this guy owns multi-million-dollar properties. If I told you what his monthly payments were for like just utilities and like the general functions of his properties, you would shit your pants. I mean, he's kind of like Ben Malla. And you know what he said to me? He said, the one thing that I did right was pay my properties off. He's like, it doesn't matter what property I bought, doesn't matter how much it cost, pay it off. This is a guy, I hate this. It's crazy in a 10-year market where real estate has done nothing but go up because interest rates have come down. You should be worried about leveraging property. I mean, that's what everyone says, right? They're like, oh, the property went up 20%. I should pull that out in equity and go put it into another cash flowing deal. I mean, that's what people do, but it's risky. I don't know. It's weird, right? Like I'm kind of more on the Dave Ramsey side of things when it comes to that. I think you should own your real estate. I think it cash flows the best when you own it. If you imagine the percentage you would make if you just outright own the asset instead of paying the bank the mortgage, and because you want cap gains, that's the only reason people do it. People only float mortgages because of the capital gains, right? And if we go into a market that doesn't offer cap gains in real estate, which will inevitably come, it'll be a lot more intriguing to see what happens to people that are, 80% leveraged into real estate and they own like 10 properties. And then all of a sudden the interest starts going up and, capital gains start flatlining or going down. And all of a sudden they can't flip more deals. And all of a sudden they're fighting to keep those mortgages and they're finding other ways to pay down that debt. Ben Malla does it. He does it a little bit differently, right? Because Ben Malla sells properties outright and he flips them into other deals. And he tries to flip them into bigger deals. And I think he's putting higher down payments as well. Because when I watch Ben Malla do stuff, like he knows what he's doing in his backyard, right? And I feel like he's putting more money down than somebody, and he's not leveraging. I don't think he's pulling, you can. I don't think he's doing it personally. I think he's getting set up for retirement. So when I look at Ben Malley, he's buying triple net leases, and when he sells properties, he's turning those 1031s over into other bigger deals, because to him it's like, okay, well, I bought this property for 20 million, it's now worth 30 million. I'm going to sell it. I'm going to take the 10 million and I'm going to go put it into a property that's worth 50 million. And, I'll put 20% down on a 50 mil property. That's what Ben Malley, I think, does mostly. He's not an idiot. He's not a guy that's like, oh, look at all the property I'm going to max it, leverage it to the nines. I'm just going to leverage it. I don't think he's doing that. I think he's much smarter than that. And I hope you are too. I mean, there's ways you can work the markets, but I still think you'd make more money outright owning. Like, I mean, think about it, right? It'd be fun to run the math. Actually, it would be fun to sit down. Maybe I'll do a video about that, where you just sit down and actually like run the math on versus actually outright owning the properties versus, say, mortgaging 15 or 20 of them. Because again, what are you thinking about? Cash flow? Or are you thinking about equity growth? Because the only reason it's worth doing that is for capital gains. If you want cash flow, you own two rental residential properties. How much are you going to cash flow in Canada? Maybe 2,000 to 3,000 a month. So if you outright own two properties, you'd be making 5,000 to 6,000 a month. Now, let's say you mortgage them with a 20% down. How much is that the bank going to take? Probably most of it. You might pocket 5% if you're lucky. So what? Your 50 to 60,000 a year just went down to what? 5,500 a month, maybe. So you just lost like 95% of that value for 5% of it. I mean, I think it would be a good video, actually. I think it would be fun to do comparables, because I really think it's only worth leveraging real estate is if you're in it for cap gains. That's how everyone went broke, man. That's how Grant Cardone almost went bust in the 2008 financial crisis. That's how Dave Ramsey went bust and, lost tens of millions in real estate deals. I mean, it's tricky business, man, but you can't have those issues if you own it. Will not have those issues. Yeah, but 5,000 per month on a mill invested though. Yeah, I know it was a hypothetical, man. I'm not saying that, like, obviously you don't want to buy a property for $1 million. It's hard, but I'm just saying hypothetically, if you were to cash flow, whatever you paid for the house, because obviously you'd have to come up with $2 million right now to own two properties in Canada to even cash flow 3,000 a month, which is insane. It's Canada real estate is nuts. Don't buy Toronto real estate. Go up north, go somewhere else. But I'm saying if you live in a reasonable neighborhood where a property only costs, say, 200,000 or 300,000, and you can cash flow it at 1,500 a month or 2,000 a month, I mean, that's pretty reasonable. Could outright own it. It's not bad. Anyways, folks, fun conversation. It's been a pleasure. I had a lot of fun. I might do these a little more often. I keep saying I'm going to try and do that, but I kind of want to. I love just kind of back and forth with you guys. So stay cool, stay awesome, and maybe I'll catch you on New Year's. Maybe do a quick New Year's stream. Celebrate the New Year's with you guys. Peace out, everybody.